Happy Friday, everybody, and happy Digital Asset Summit at the White House Day. And of course, it's time for the Security Token Show. We're your hosts. I'm Herwig, joined as always by my co-host, Kyle. And we're here to bring you the latest tokenization and RWA news from the week. And we've got a great show this week, Kyle. We got a couple of great guests, Nico and Dave Hendricks from Vertalo on the show. How are you, my friend?
Herwig, I'm doing great. I'm looking forward to a quad box in our market movement segment. That should be pretty fun. Maybe the first that we've done that certainly in quite some time. And other than that, I'm excited about the executive order from yesterday, the Bitcoin Strategic Reserve, which on top of the digital asset stockpile, I think we were all waiting for a particular Bitcoin reserve, and a couple really interesting notes in that component and then that order that I think are really bullish for the industry.
Yeah, I'm very excited, especially what's going to come out of today. But we've got a show to get into, so let's do it.
Welcome back to another Security Token Show interview. This week it's a little different because it's a completely new topic that we're covering here. But first, let me introduce Dave Hendricks, founder and CEO at Vertalo. Dave, how are you today?
I'm great, Jason. Great to see you, and excited to share all kinds of things about DAS Blockworks Week and anything else. So.
Absolutely. Well, that the whole week is coming up soon, but there is a very specific event that you guys are covering here and hosting rather, which is the RWA Night. Tell us about the event and really what you're trying to accomplish with it.
Yeah, so RWA Night was inspired by Travis Johns and Tyler Sherwin's RWA Day, and I really liked what they did here. They started out in they did their first in Salt Lake in October, and I thought it was a really, really great group. And they did another one in Denver and at ETH Denver, which I call RWA Denver. And coming out of that, what I saw was at these events, and this is the case with lots of events, people, they watch a couple panels, maybe people that they know, or maybe they're interested in a topic, but most people go to these things to meet other people. Okay. They go for the networking, they go to meet and reunion. And I thought, okay, why not do something like RWA Day with the RWA Day guys, but do it at night and make it no panels, no speeches, get the issuers in the room, get the technology providers and platforms and layer ones and the press and investors, and get them in a room with no structure at all. Okay. No panels that you have to pretend to listen to while you're on your phone. Just like face to face. I think RWA Day is great. I love these things, and I think a lot of these things are really useful. But but people want to talk and learn from other people, and so that's what this event. That's what RWA Night is about. It's about face to face.
Yep.
Okay, not like one to many. Okay.
Yeah, we're essentially you're bringing back those hard relationships that only happen really at least to that level when you're in person, you're interacting. It's active. Let's talk about the environment that you're setting for that to happen, right? You want a really cool environment. Let's pull up some slides here just to take a look at what people can expect from the venue. But tell us about the venue and what people can expect here and the kinds of people that you're inviting. I know you mentioned some examples there, but give us a little bit more of what the roster looks like.
I'll draw the whole picture. This is a boutique hotel in Midtown Manhattan, which is convenient to not only to Javits North. It's straight across town without you don't have to take a left or right turn from Javits North. It is conveniently located next to every subway line, every single subway line you would need in town if you want to take the subway in New York, is within like 2 blocks. And it's right straddling the east and west side, and it's not upper midtown and it's not lower downtown. So super easy to get to. It's in a boutique hotel that I have been staying at since it's cold open. Okay. I've done events there. I've stayed there a dozen times, and the access to the space is right from the street. No going, you don't have to go up an elevator. You don't have to go through a huge lobby. We will do a takeover of the whole place. We have capacity for 250, but I have 150 in mind for the event. Okay. I've already received 250 applications to attend this. It is free. Okay. But when you've got 250 people, all who want to bring a +1, now we're talking about 500. So what we're doing, quick, right? It's a lot. So we have to keep it low. Maybe it'll end up being 200. This is an entirely sponsor supported event too. Is it a pay for play? Sure. I mean, you should want to be in a room where there are literally like at least 50 RWA issuers. Okay. There's like, I would say it's probably more like 100 different people representing different RWA offerings. Okay. So it's like, this is actually the substance. There's dozens of technology partners. There's layer ones. There are major financial institutions, major media, okay, consulting firms, law firms, and
all of it.
All of it.
The whole enchilada of the industry, essentially.
Yeah.
You'll have there. So different people that can attack things from different angles. And obviously it sounds like you can meet partners, clients, et cetera.
Well,
sounds like a great time.
The whole thing. Now, here's the deal. You can't, when you have this much demand, okay, what you want to do is you want to make sure that the attendees are not like curious civilians, okay? They're not people who are interested in RWA. They are people who are heavily invested 24/7 in it from whatever perspective. And so you've got to have, people who are great, who are going to exchange ideas. Everyone has to bring something to this because we are facilitating an event which is free for the approved applicants, but we want to bring in technology providers and service providers and layer ones and other folks for whom a tremendous amount of value will be derived from being in this room. And we're going to, and so it's going to be a really tough cut. I mean, it's literally like Thursday at the US Open, okay, or at Augusta. And so you got to make the cut. And that's not based on whether you're my friend. Okay. It's just not like that because I don't need to throw a party for our friends, people we know. We need to put a great group together.
Sounds great. Well, one last shot here for anyone watching. Go ahead and scan the QR code if you're interested. I hear that there's a chance you might expand it if there's enough, right? Interest and whatnot. So
yes,
we'll put that up. We have like 30 seconds left, Dave. So I do want to quickly ask, how are you seeing the tokenization space really evolving this year? And how do you think events like these and the conversations will change with that?
Well, we've all been in this for a really long time, and me among the longest. And this is like cycle 3, okay, in our industry. And now everything is RWA. STO is RWA. DeFi is RWA. Stablecoins is RWA. Like everything is RWA. Even meme coins to some degree, you can consider to be RWA. But it's amazing the amount. It just went straight up north, and we're crazy busy right now, and it's really interesting, and it's fun to see. Finally, like you and me, see the area that we've been focusing on for years come into high relief and be the hottest thing, and it's super exciting.
Fantastic. Well, there you have it, everyone. Thank you, Dave, for joining us. We're going to be transitioning on to the next section of the show.
Great. Thank you.
Thank you, Dave, for sharing that awesome news about RWA Night. And of course, now it's time for the show to have a little conversation of the week about what's been happening, the biggest market movements. Thanks for sticking on around, Dave, and glad to have you back once again, Nico, from Blue Bay Ventures. For anyone who doesn't know, one of the leading RWA VC firms. And Kyle, let's get into it, my friend. Some big news this week, right? Ooh.
Let's do it. So our first headline here, gentlemen, is that it looks like Nasdaq is finally bending the knee. And when I talk about that, I mean, they're actually planning to go 24-hour trading. This is something we've seen in crypto for how many years now? 15 years almost. And Nasdaq is finally looking to potentially embrace this. We have seen aftermarket trading be something that's existed in these markets. Certainly dark pools have been moving assets and money overnight for many, many, many years. But it does seem like from a retail perspective, Nasdaq is going to embrace the 24-hour trading Monday through Friday, which it looks like is not only just going to be an interesting thing to discuss here, guys, but it maybe is a difference because we don't see that the New York Stock Exchange is embracing this. So maybe this is also kind of the first of some of these features of competition coming from different stock exchanges. What's everyone's thoughts around the impact of this on liquidity, the impact of this on global market volatility, anything like that? Any thoughts around this new headline?
Oh, well, I'll go first. I think it's great because finally the people at prop desks at banks are not going to be able to go to their 5 p.m. squash game anymore, and they're probably also going to be less well groomed as a result because they won't be able to take they're going to have like, you know, sit on deck all the time, and it's hilarious. But that's just the funny part. The complicated part is that all these firms, and maybe you're familiar with this, Nico, they typically close their books, right, at the end of the day. And what this does, this has the same problem with T+0 settlement. T+0 settlement is very, very difficult because it causes the banks to have problems with understanding where their balances, like their positions, and not having a close is a major structural and cultural change to Wall Street, like full stop.
Yes, they're finally capitulating, guys. That's what's going on, in my opinion. Yeah. And by the way, I don't know if this is also over the weekend trading. I don't know about
5 days. Only 5 days a week.
Only 5 days. So the weekend will follow because they want also some piece of action from this weekend trading that we have in the crypto markets. So it's going full circle, in my opinion. And yeah, if there's juice to be earned, that's where these guys will trade and will get their platforms. And in my opinion, the New York Stock Exchange will also follow. Kyle,
Yeah, I mean, it's interesting. It's actually really weird because if everyone understands the concept of time zones, okay, you know, not having like when does the all day trading stop? Okay, in what time?
Never.
What time zone does it begin? When does the weekend begin? Does it begin on UTC? Does it begin on like, you know, East?
I think that the exchange would argue that it's EST. The day begins and ends at EST.
It will all move to UTC probably, like the blockchain.
Perhaps. It's interesting because for a lot of security token or RWA marketplaces that introduce already 24/5 or 24/7 really trading, the argument that I've heard from a lot of people, because we don't see liquidity there, and this was one of the arguments that, you know, is the benefit of Wall Street, is that they concentrate liquidity during the 9 to 5 window, and therefore you are able to get a level of volume that provides real liquidity versus 24-hour trading. Therefore, you know, kind of making it less of a benefit. That's the argument. I don't know if that's true.
It's amazing. Yes. Herwig, you are spot on. And here's the thing. So when you've got everything from like a short redemption window once a quarter, like you'd see in a private equity fund or something like that, where they say, you know, this time you can get out. This time, like 4 times a year for a week, you can get out. Okay. The crypto markets, they're 24/7, 365, right? All that sort of thing. Public markets, you've got, you know, Monday to Friday U.S. time, et cetera, and not even on some holidays, whatever those holidays happen to be. And then you've got ATS markets, which are effectively, by default, they're order matching systems, and they're open all the time. I would argue that the private order matching systems for bid density purposes should be open less for certain issues. Okay, I would say that, because what you're saying is that when people don't have to be somewhere, then they don't go there. Okay.
Yeah, the scarcity is kind of what drives the activity, right?
Yeah.
Yeah, I think it's a great point, because I want to jump on that, and I want to hear your thoughts, Dave, because my mind also went to volatility. So like if the markets are forced to be closed, it allows companies to release earnings, for example, and allow the market to digest some of those things without making really spot trades that have big swings. Yeah. I don't think that necessarily prevents volatility. Obviously, we see that throughout the stock market, but I don't think you see quite as many of these like big swings up and down as the market adjusts to events in real time. And I wonder how that's going to impact the market, especially with how much is quantitatively traded these days and where price targets and things are made programmatically. Those short-term price changes could cause cascading effects that maybe the market doesn't actually believe. It's just in a moment of kind of churn throughout the market. Do you see that as being a risk factor?
Yeah, it's so interesting, right? Because you see things happen at the open, and you see things happen at the close. If there is no open and there is no close, then the machines don't know what to do. At the end of the day, they may want to close positions. A lot of them, being derivative type options and things like that, which drive a lot of this.
Unless you just shifted the goalpost to 12:01 a.m. on Monday and 11:59 p.m. on Friday, and now I don't know. It's interesting.
It's just crazy. Like, who are they? Are people now going to be on these desks? Are there 2 shifts, 3 shifts on these desks? It may be a job. It may be a jobs program for traders rather than for machines.
It's a culture.
I can already see the difference. I'm in my neck of the woods, and where I'm situated, I'm also in the equity market, still active with some other venues, and I'm active in the crypto markets. And you can see already that the concentration of liquidity during the U.S. trading hours is very profound in the TradFi, let's say like that, market, where Asia and Europe essentially don't really trade, and they wait until the US opens and see how the markets react over there. But in the crypto markets, it's full on. The trading is full on, and you can see that market makers and liquidity providers are full 24/7 active in crypto markets, but not really active in traditional markets. And I think the traditional markets want a piece of this action, and they want to go full board also. That's and I think it's a logical evolvement of these markets.
It makes sense because commerce, communication, etc. Those things are not there's not a start end point. Well, unless you live in Europe, like France or the UK, where they stop answering emails after 4 p.m. on Friday. But this is for us people in this in the world that we're in, those worlds are going to converge, right? And it has nothing to do with tokenization, but it's you're saying, look, this is going to be a global market. It can't be these things are going to trade over here, and they're going to, and I don't know. It's natural. I agree, Nico.
There are some fantastic points. We're going to move on to this next one because I know you've got thoughts on what's happening live right now at the White House, the Digital Assets Summit. Some of the biggest names that managed to donate the biggest sums of money have managed to make their way to the White House and have Trump's ear. What do you guys think is happening right now? I know there's a live stream, so we can't really tap into that, but now we can see what everyone thinks before we get a chance to digest it all.
Still not a lot said. If I look at the Bitcoin price, things are still quite.
At least it bounced. It's over 90 again. That's better than nothing.
It's better than nothing. Exactly. True.
Well, any guesses or speculations what might come out of this, or where this leads, or what the announcements could be?
It's so interesting, right? Everyone got all excited on November 6th, right? And Bitcoin had hit like 109, like leading up to that. And now it's just like trading in this crazy range between 82 and 96, and people are big sad about that. I'm fine with there being a digital asset summit and crypto summit. But the first thing is like we need to deal with a couple of base issues, and there's no one in the room there who can represent two things. Okay, I do not see this being answered, and this might be of interest to you, Nico. First of all, someone who built deep distributed ledger technology here. And we're talking about stocks here. We're talking about all these things, just things you trade. It is still impermissible to use blockchain as a ledger for securities. Okay, I still have to run a mirrored system over here, and I've done this more than anybody. I mean, I've got more people on this and more clients, and it's like I have 100,000 investors, and I'm custodying 300,000 securities lots in my system. Now, I have to write all of that to a Postgres database to comply with existing rules. Okay, mm-hmm. So first of all, there's no one in the room that I know of who's talking about this key issue, that distributed ledger technology is an improvement, structural improvement for asset management, transfer agency, share ledgering. It's just better than spreadsheets and databases. And the second thing that I don't see anyone here at this summit grinding on is that any shares which are written to chain need to be the actual shares. They cannot be proxies. Okay, you know that the tokens that you trade, even the meme coins, like any of the RWA stuff, those are the shares. Okay. But if I'm a private Reg D company here, I cannot write my shares to chain and then consider the tokens that are produced by that to be the real medallion securities. Okay. Even though they're better than the current version. So until that happens, until they get to the use of distributed ledger technology, which is the master to all crypto, okay, then all of this stuff is just messing around with coins, okay, and it's evading and avoiding the key.
The question I have, Dave, is Vlad Tenev, the CEO of Robinhood, is going to be there, right? And so obviously Robinhood does do some crypto trading, but they're a leader in retail stock investing, and they have commented on how securities should be tokenized. We also know Brian Armstrong from Coinbase is going to be there, and they acquired Keystone ATS multiple years ago and have discussed tokenizing their equity in the past. Could these types of individuals kind of have expertise in this space, or at least the understanding of some of these roadblocks, and perhaps be advocating for some of these things?
Well, the thing is that the Republic too will also be there.
Oh, that's right. Yeah. But the thing is, are they going to do this? Okay. Are they going to focus on the secondary side? So that's the thing. A lot of these people are focused on secondary only.
You're not wrong.
Okay. And they just want free trading. Okay. What they don't understand, I think, and people who are new to what we do not understand the order in which things happen. And the order is that when you tokenize something, the first thing it does is it creates a ledger, okay? And what's on the ledger are the tokens are the representation of what's on the ledger. It doesn't come in any other order. So tokenizing something is mimetic, okay? But there's a lot of work that goes into what happens to facilitate trading, to restrict based on private or public, time, who, what. And then when something trades, how does that reflected? How do you deal with investor protections? How do you enforce co-sale agreements and ROFRs? And there's a lot of stuff. So you can't just tokenize something and be like, wow, we tokenized it. Then guess what? There's second order effects. What happens when it trades? Where is that trade recorded? It's not recorded at a broker dealer. It's recorded at a transfer agent. Okay. Yeah. And so you can't tokenize the world without having some form of transfer agency function. It's not possible, because, unless you're creating bearer assets where investor rights and other, OFAC and KYC or whatever, accredited, any of those things apply. So I think that they are a little ahead and they're focused on secondary. And I hope that this issue comes to the fore.
I think it will. I mean, the good news is we've at least seen many other countries many years ago already do this, right? I was actually telling Jason this morning exactly that, Dave. So I agree with you completely. It is as simple, it sounds crazy, but it is as simple as saying that tokenized securities will be treated like securities. Yes. Being able to use the source of truth as a blockchain, using blockchain changes everything.
Yes. It's the first step, guys.
One thing we need. Go ahead, Nico.
Yeah, it's a first step. It's getting the public aware that there's a new technology around the corner. For us, we are. I'm 10 years plus in this industry. For us, I'm really on your side, Dave. That have to be lots of things that have to be done. But for the major public, this is just the first blimp of what will be the future. And so getting the president of the USA on our side, let's say like that.
It's great. Don't get me wrong. I'm all for it. Yeah, but the thing is that they're starting at paragraph 3. Okay. And there really hasn't been a really big problem with trading like altcoins or Bitcoin or NFT. Like, that's not a problem that needs to get solved. Okay. Mm-hmm. And now with the SEC, saying, hey, meme coins are beanie babies, effectively. Okay. And Bitcoin is a commodity. And, you've got all these people who are, the Genius, the Stable Act and the Genius Act and SAB 122 and FIT and all these things. Like, we're good. Okay. We're good on trading stuff. No one's going to go after you anymore on this. Okay, check, done. Now let's go back and focus on the foundation, because if they don't focus on the foundation, like, they're not going to, the real opportunity here, which is much bigger than altcoins, much bigger than Bitcoin, is the world's private markets, which are 85% of all assets, maybe 90. Okay. Like, there's huge ground fruit. Okay, there. You don't have to tokenize public markets. The blockchain stuff is not fast enough for that right now. It's not going to, that's too much. Just focus on asset management, which is my focus here for Talos, asset management.
So you don't think the tokenization of coin stock is going to do much for the industry? Is that what you're getting at, Dave?
I don't know what that is, but tokenization of coin stock. But yes, I don't think that just tokenizing things fixes stuff. Oh, I mean, tokenize coin. Yes.
Oh, sorry. Yeah. Coinbase is looking to tokenize their own, they've hinted at, they're exploring it. How? We have no clue. And we all know on this call how difficult that actually will come to be.
Why do they want to do this? What's the point? They're already listed. It's an amazing stock. Well, I don't understand the point.
It's driving to base. So Coinbase's main revenue driver and their 10-year revenue forecast comes from Base, their blockchain solution, probably not from trading fees. So if I had to guess, I'm going to guess that they're going to tokenize this through Base and hope to drive more adoption of that solution as a potential future mechanic for others. Not to mention, as we saw with Overstock, it was an incredibly powerful tool to force location of shorts. And so perhaps as it's a great hedge for them to be able to press that button whenever they feel like they have an outstanding amount of short shares or short positions on their stock, because it does force anyone that takes a short against them to actually locate the underlying share in order to claim the airdrop.
Also opening up the capital base and the shareholder base to the world. I think that's also a very important aspect for Coinbase, because they want to be, next to that they're a US based company, they want to be a global trading hub for everybody, and they want to represent, I think, also Asians and Middle East people and all these people who have no access to their stock at the moment. They want a piece of that pie too, and I think that's very important for Coinbase at large.
Yeah, don't get me wrong. Coinbase is an investor in Vertalo. Okay, so like I get this. Okay, and you know, I would liken this to a global depository receipt approach. Okay. And I think that, if you're familiar with an ADR is, or just generally a depository receipt. And I think it's great. The thing that I get concerned about in some of these markets with making certain things natively tradable, especially primitive equity, is the people who trade in crypto are just simply craftier. Okay. And I think that there's, I would create another tracking stock rather than this. I would do another.
But it's not primitive, right? It's publicly listed on.
Well, no, but it's a primitive. Okay, it is base equity. Okay.
No, it's Coinbase, the company's equity.
Coin equity.
Yeah. That's what I'm saying. It's their equity. Okay. Right. And what I'm saying is that there's a lot of
primitive because it's listed on.
Yeah, it's a form of primitive. Okay, it's not a derivative. It's the equity.
Sure. Okay. I usually would use that term to describe like a pre-IPO equity, but maybe.
Oh, I understand. I understand what you're saying. And what I'm saying is that there's risks to doing this. I would create a tracking stock and tokenize that.
Can you explain the difference for anybody that's listening that may not understand the difference between the base level equity and then a tracking stock?
Yeah. So if you look up if for the readers here, if you're not familiar, there are these things called ADRs. These are called American Depository Receipts. And typically, if you want to buy and sell a publicly traded equity, but that is listed overseas, the overseas entity will issue what's known as an ADR. The ADR is a proxy form of share that can be traded in U.S. markets. Like, for example, I traded a lot in and out of Nokia for a long time back in the day.
Yep.
And I wasn't trading in
Samsung, for example, in the South Korean market.
Yeah, same thing. Okay. And so, these things are, they're slightly disconnected. They track. Okay. And, my thing with tokenized equities is, having done so much of it, you have to, you have to make sure that you're not damaging your market cap by throwing it into like a shark pond. Okay. And I would just issue a GDR, maybe a special issuance to existing investors or something like that. And make it.
But doesn't that, like, from an ethos perspective, like kind of defeat the isn't that kind of like we're not doing this as like in a real way, we're doing some kind of
good question.
Synthetic.
What I'm just doing here is I'm firewalling here, and I'm not in the room. There's a lot of things like I don't really think tons about tokenizing existing publicly traded shares. I don't think that's not where I think it's important to start. I think in some ways that it's cool, and companies like Coinbase should be the first ones to test this. Why not? It's a little bit performative. Okay, I don't think that's where the problem is. That's the thing. I don't think the problem is in liquidity of public shares.
Maybe it's it's not necessarily a problem from, as to your point, infrastructural or from procedural, but maybe it's like an ideological potential bridge that Coinbase is the most familiar company for a lot of crypto people. So them launching their equity maybe starts to whet that appetite for
I get it.
other types of asset classes.
I totally get it. When Larry Fink started doing stuff, whenever these folks do things, they may
we've
not.
seen how Biddle has been huge for treasuries, for on-chain treasuries, and for driving real yield. And it's really more sustainable environment for
with 50 investors into the like holders of whatever they make.
Well, but they're the biggest treasuries in crypto, right? So like it's kind of like a street name style.
I don't want to get into the economics of those offerings, but these are lighthouses. Okay, when these people do this, they are lighthouses, and what they do is they help people find their way, and it's great, and they should lead with themselves. Okay, my only argument is this is great, but I don't think it's where like the biggest market is, because I don't think that I think it's good as a demonstration and like eat your own dog food. I love it. Okay, I'm not against it. I'm just saying that I don't think that that's where the huge TAM and market is in rehypothecating publicly traded shares. Okay,
fascinating stuff.
Well, guys, this is all the time we have, but I do want to drop this and shout out the report recently released by Bricken and in partnership with STM.co and Cointelegraph Research. So definitely go check that out if you're interested in some good reading material about the 2025 trends. Obviously, RWA Night. Hopefully, I'll see many of you there. We'll be up there, of course. And go follow Dave. Go follow Nico. Get in touch with them if you're looking to tokenize or looking to raise money for your project. These are the two that you should be talking to. Thanks for coming on, guys.
You guys are great. Thank you so much. Great to see you.
Take care. Thanks for coming on.
Well, Kyle, that time of the show.
Yes, I can't wait, Herwig. It's been a great show. We had the incredible Dave Hendricks making sure to share all of his fantastic hot takes, brought a lot of great energy to the show. We had what has now been, I think, a fantastic episode, but of course, it would not be a complete show without the longest running segment in the entire show. And this is the companies of the week, where we highlight two companies that are crushing it, that deserve a major shout out for being a part of something bigger than just their announcement. And Herwig, I love this segment because it really is a good opportunity to learn from you and figure out what you think is the most important news in the industry. And so without that further ado, I do want to hear, who was your choice for this week?
It means a lot to me, Kyle. It is interesting. We do have to sort of pick usually a different winner here. And I have to give it this week. Unfortunately, we didn't have time to get into all of the updates and there were many that happened this week. So we didn't have a chance to cover into that. But I wanted to highlight Maple, Kyle, because Maple Finance announced that Bitwise has officially started allocating to their on-chain credit offerings, right? So this is a big deal. This is a $12 billion asset manager, huge, obviously a leading crypto sort of asset manager, right? And they're endorsing Maple, which is just to me, the future. Again, these are all the writing is on the wall about RWAs being embraced again by not just TradFi, but also by the crypto industry. And this is a perfect example of it. They want to take advantage of these opportunities that Maple has brought to market in this on-chain fashion. And it makes a lot of sense. And I think Bitwise is going to lead by example here. You're going to see many other asset managers follow suit, take advantage of these new DeFi type opportunities as well, if you will. So, Kyle, any thoughts on the Maple news yourself?
It's a great choice. They are a huge, important lender in the industry, providing collateral, which I think is one of the killer use cases of this industry. They're also, their CEO, Sid Powell, has supported us at Tokenize This. He's also based here in Miami. So we love that on multiple fronts. I think this is a great choice.
Well, Kyle, there's always two winners. So hit us. Who you got?
Herwig, I think sometimes I like to try to pick a smaller company. I like to do fundraising opportunities and capital markets activity, just because of the fact that a lot of these companies deserve credit for breaking the mold. And this week is a little bit different because it is not a startup. My company of the week winner this week is Coinbase. And I'm particularly giving them a shout out because of the fact that they've done a really good job in launching the base product, which I think has driven a lot of adoption towards tokenization. They've obviously been incredibly impactful with the legislation and how they've been pushing against some of the performative restrictions that have been placed on them and the broader industry by regulators in previous administrations. And now with a lot of the rumors circulating that they are finally thinking about moving forward with tokenizing their stock, something we covered here on the show years ago when they acquired Keystone's ATS, when they've talked about this in the past. It seems like maybe there's some actual momentum here. I love this opportunity. We talked about it quite at length in the market movements segment earlier. But on top of everything that we described, I'm excited for the arbitrage opportunity because we did see a significant arbitrage window in the overstock stock when that did their tokenized distribution. I would expect something similar on day one of this Coinbase airdrop. You're going to see a lot of sell pressure. But remember that presumably these are going to be like-to-like one-to-one assets. That means there's going to be a spread. So for me, as a moneymaker, also excited about looking at some of those opportunities as well.
It is a awesome notion, obviously, as we discussed earlier on the show. But also, I want details, man, because there are so many ways that they could ultimately end up doing this, right? The overstock method, like you said, ultimately they could maybe do this internationally, kind of like what Dave was hinting at with the sort of ADRs. They're going to sell it direct through Coinbase. I just, who knows, man? It's very, very exciting. I think it absolutely is a great choice. And I'm excited for that to happen. It could single-handedly educate a lot of people on RWAs and what the potential is.
Absolutely right. And that's our company of the week winners this week. Herwig, what else is on your plate moving forward?
And it's all tokenized this right now. So come and join us up in New York City next month, folks, April 16th to 18th. Okay. Use the code STS for 25% off and come and join us because we've got some of the best speakers in the entire industry coming together, all walks of life, if you will. We've got the blockchains, we've got the tokenization marketplaces and the like. We've got the banks and asset managers. We've got it all here coming to New York City at the Glass House, which is an awesome, awesome venue. We're expecting about 1,000 people, Kyle. That's the goal. 1,000 people in the RWA industry from TradFi and Web3 coming together. I'm excited. Go check out the website at summit.stn.co for the full speaker list and agenda. We're very proud of everybody who's joining us. And so, Kyle, that's all I got. Anything new from Global Settlement Network?
Look, things are going really, really well. We're firing on all cylinders right now. And so if you're a tokenized commodities issuer, if you're a stablecoin issuer, hit me up. We're doing a lot of work with some institutional counterparties and working on how that banking ecosystem works. So a lot of good things going on here. Also, buy the book. We are a bestseller on the Blockchain Explained book. We keep having sales. I've done some really cool speaking opportunities and working with law firms. So if you're a firm in the legal industry that needs advice or perspective for any of your clients, Herwig and I are always helpful on that front, and we love participating in the broader ecosystem.
Give us a like, subscribe, please share. The support really means the world as we continue to bring you this show every single week. And with that, everybody, have a fantastic weekend and happy tokenizing.